Hello everybody, it's your boy Tortoise Investing coming at you today with another video. It is Friday. Fridays are portfolio update days. We're going to take a quick dive into all my holdings, the finances behind them, the dividend history with them, and a little bit of news here and there. If you are new, we're currently at 167 subscribers. It would be awesome if you would hit that subscribe and that like button. They are both free to do, and they make me extremely happy. I love seeing that number grow video to video, and let's keep marching on to 1,000, 10,000, 100. Let's keep on keeping on. Now, down below, comment, what are you looking at right now? Are you holding off? I know the S&P 500 hit over 4,000 again. So is this going to be a short-term rally? Is this going to be something that's sustained? You building cash? Let me know down in the comments below. I love hearing from yous. Now, without further ado, let's go ahead and take a look at the portfolio. On the day, we were up 1.55%. These are our holdings. We're going to go to the 1 week, just see how we've been doing compared to the S&P 500. Let's see, just for the day. For the day, S&P was up 1.61. We were up 1.56, so just behind it. For the week, we were up 2.09. S&P was up 1.33, so we're beating it for the week. And for the month, we are up 0.23, and the S&P 500 was down 1.60. So making up a little bit of ground. We are catching them. Remember, the goal is year to date to be beating it, and we are not that far behind. Yeah, we are within like 1.2%, so we're catching up to it, and I'm hoping to keep doing that throughout the year with these holdings and be able to surpass it and do better than the S&P 500, because that's the ultimate goal. These are holdings, these are share counts, these are my average price buy-ins, unrealized gains. I've been DCAing ever so slowly into these positions to get my average down. Johnson & Johnson under 160 is just ridiculous in my eyes. But yeah, that's everything I think is looking pretty good. Can't really complain too much. Here is VOO, just a quick look over the last 10 years. This is one of my core holdings, up 165%. And SCHD over the past 10 years, up 145%. With dividends reinvested, I believe this outbeats VOO, but just by a little bit. Now, one of our bigger holdings, American Tower Corp. This is my favorite REIT of ever. They have great revenue, the EBITDA, cash flow, net income, everything's pretty much ticking in the right direction that you want to see from your REIT. And when it comes to REITs, the payout ratio here is high, 3.15%. You want to look at FFO, which are the funds from operations, which I have pulled up here. And if you will see, quarterly funds from operations is $2.34. $2.34 per share, which was beating the estimate of $2.23, and this compares to the FFO of $2.18 per share a year ago. So everything is increasing at a quicker rate than expected, which is also good, which means that they're going to be able to keep increasing that dividend. They've been increasing their dividend for the past 12 years. Here are the dividend growth rates over the 1 year: 12.4%, 3 year 15.7%, 5 year 17.4%, and the 10 year 20.6%. Now, the thing with American Tower Corp, if you don't know, they increase their dividend every single quarter, and I love that. I love that about this holding. Plus, it's cell phone towers. That's their REIT. That's their rentals. So that's something that's always going to be around, always going to be more and more of. Phones are taking over the world. Next up is Lowe's. Lowe's is one of my fairly sized holdings as well. I don't have a lot of holdings, but I've got a decent amount of everything, which is how I like it. They have a free cash flow yield of 5.98%. They have a dividend yield of 2.04% and a payout ratio of 35.6%. Everything falling in that range that I love to see. Revenue, EBITDA, free cash flow, net income, the EPS, everything climbing in the right direction. They're buying back shares. Their return on capital employed is ridiculous. And they do have debt. They have 23 billion in debt. Their EBITDA is 13.9 billion. So my thing is I try to keep that ratio below 3 times. If they have less than 3 times debt to EBITDA, that's a green light for me. I don't view that as a bad thing. Now we look at their dividend growth history. They've been growing their dividend for 49 years. Ridiculous. Love it. They have been growing their dividend incredibly quickly as well, which is another thing that I love about this stock. Their 1-year growth rate is 31.6%, 3 years 22.8%, 5-year is 20.1%, and the 10-year is 20.3%. So another thing that I like about this is if you see this number growing as it's going growing this way, that means that the company is doing fantastically. Their cash is flowing ever so nicely, and everything is just growing quicker than they can grow their dividend. That's what you love to see. Alrighty, next up we got automatic data processing. This is another one of my nice little holdings I like. It's got a free cash flow yield of 3.15%. It's got a dividend yield 2.27% and a payout ratio of 58%. I like this to be below 65% for all my holdings. That makes me happy. It just shows me that they're able to manage their finances very well and still have a little bit of cash left to reinvest into their company. Now, revenue, EBITDA, free cash flow, net income, EPS, everything's going in the right direction. You're going to notice a trend with all my holdings. Again, they have debt, $2.99 billion compared to their EBITDA of $4.4 billion. Not a problem whatsoever. They do share buybacks pretty aggressively. Return on capital employed, again, very high. That's another reason why I really like this company. I feel it's super strong, and it has got a pretty wide moat, I feel. It's been growing its dividend for the past 48 years. Take a look at the dividend growth rate here. For the 1 year, it's 14.1% dividend increase. 3 years, 10.04. 5 year is 13.3, and the 10-year growth rate is 10.43. So above 10% dividend growth. Love it, love it, love it. Next up, we got Johnson & Johnson. This has had a little bit of a rough year so far, mainly because of the... Did I have the annual pulled up for that? Yeah, I did have the annual pulled up. Mainly because of the lawsuits against them for the baby powder. That's made it to where it's at a very attractive price. In my eyes, anything below 160 for this company is fantastic. It's a great buy-in to start a position. Not financial advice, just this for entertainment and educational purposes. But I do love this below 160. It's got a free cash flow yield of 4.41%. They've got a dividend yield of 2.95% and a payout ratio of 66.4%. So right there at that 65, I'll give them a pass. Revenue, free cash flow, net income, EPS, everything, again, pretty much ticking in the right direction. They have more cash than debt, which is... you love to see this be positive. They were doing some share buybacks. Their return on capital employed is very reliably above 15, and their dividend growth is amazing. They've been increasing their dividend for the past 61 years. They've got an average dividend growth over the past 1 year of 6.2%, 3 years 5.8%. The 5 year is 6.03%, and the 10 year is 6.37%. So a nice dividend yield starting out, and this beats inflation, and this is just one of my defensive holdings more than anything, and I love it. I love it at this price. They're splitting off into 2 companies. I don't know exactly when that's going to occur, but I think that's going to help them a lot as well. Alrighty, my last holding in here is Activision. I bought into this at $76.38. That's when I accumulated my shares. And they have been... Microsoft's going to be doing a buyout. The buyout's at $95 a share. And things have been going in the right direction for this buyout. They made a deal with Nintendo and Nvidia. So they got green lights from them. And I believe that if everything goes well, which it has been, as you can see, I believe it's April 24th. Don't know if that's the exact date. Sometime near the end of next month is when they're wanting to try and close out the deal. We'll make a final decision on the deal, and I think June's when they're going to close it. So that'll be a nice, about 20% bump just from this alone. And I don't know exactly what I'm going to do with the funds from that just yet. I'm leaning more of throw it all at Microsoft. And I'm hoping by the time that this occurs in June-ish that I can jump into Microsoft around 220, 230. That's the dream. If not, I might just sit on this cash for a little bit that I get from it. I'm not very sure. We'll see what happens. I don't want to, plan too far ahead and then something end up going wrong with the deal. But yeah, guys, that's just a quick look at the portfolio, my holdings, and a quick dive into all the information dealing with all of them. So yeah, I hope you enjoy. Again, hit that like and subscribe button. I greatly appreciate it. And until next time, see yous.